Alright, for this video I want to go over a sample Ohio IT 1040, which is an individual income tax return. So this form can be filed for residents, part-year residents, or non-residents of Ohio. And in this example we're going to look at a part-year resident return where our taxpayer here started the year living and working in Ohio and then moved to Florida. So we've got the IT 1040 here for the taxpayer. We've also got her federal form 1040, which we'll need as well. And then we've also got the Ohio form instructions. And we'll need to take a look at these instructions to look up the tax tables and calculate the amount of taxes owed on that Ohio income. And then I've also got just two slides here, one covering the background information on the fact pattern that we're going to be looking at, and then a second slide and just some Ohio notes. So we'll start with the fact pattern here and then look at the notes and then get into the return. So our taxpayer here is Emily. She's a single filing taxpayer and resident of Florida at the end of 2022. So she started the year living and working in Ohio and then moved to Florida on April 1st after accepting a new job in Orlando. So during those first 3 months that she was a resident of Ohio and working for Company A, she was paid $30,000. And so at the end of the year, the company sent her a W-2 showing the $30,000 in wages. That's federal and Ohio wages. And she had $1,489 in Ohio state income taxes withheld. Then, when she moved to Orlando, she started working for Company B, and her wages for that company were $117,000, and that's going to be all Florida wages, right? So it's a Florida-based company. She's living and working in Florida, no longer spending any time in Ohio. Now, for her investment income here, she's got a couple of sources of investment income. She's got some interest income from a bank account totaling $305 for the year. She's also got a brokerage account where she was paid some dividend income, so qualified dividends at $950. And then she sold some stocks later on in the year, which resulted in long-term capital gains. Now, the investment income is represented in this table here, and the format is based on the date when they were paid, right? So this is important because the investment income that you earn while you're a resident of Ohio, that is taxable in Ohio, but the remainder that is paid out or accrued while you're a non-resident is not going to be subject to tax. So in this table here, what Emily's done is gone back and look at her bank account statements, the brokerage account statements, and pinpointed what the amounts were that were paid each month and when they occurred. So you can see the interest income here paid out at the end of each month. Those were the amounts. The dividend payments, when those were deposited into her accounts, and then the dates that she sold those stocks and recognized those capital gains. So the amounts up here above the line, that's going to be attributed to Ohio because she was an Ohio resident at that time. So that'll be taxable there, but the remainder of these items are going to be effectively Florida source and taxed in Florida, but Florida doesn't have any state income taxes. All right, so let's look at the notes here, just a few things to cover, and then we'll get into the return. So the part-year resident or non-resident Ohio returns, you're going to need the IT NRC for a non-resident credit calculation, and then also the Ohio Schedule of credits. So those will be filed alongside the IT 1040. Now, as far as character of income, long-term capital gains, qualified dividends, all of this is just going to be taxed at one rate. They don't have variable rates like we see for federal tax purposes where you get reduced rates for qualified dividends, long-term capital gains. That doesn't apply here. Ohio does have different rates and carve-outs for business versus non-business income. In this case, this fact pattern, we only have non-business income, so compensation, interest, dividend income earned on a personal account, all that's just going to be non-business. So not going to be an issue with this return, but something to keep in mind if you have business income. Now, how do we allocate the compensation? So compensation, it can be allocated using either the ratio of days that you worked in Ohio to the total days worked, or the location of the specific services that were generating the compensation. In this case, we can just use the latter metric here because she's going to be easily able to trace, well, the wages from Company A were earned while I was living and working in Company A, so that'll be Ohio wages, and then the rest of it will be Florida based. And then investment income, as we showed on the table before, right? So when are the interest and dividends paid or accrued? If they were done so while you're an Ohio resident, then those are going to be taxable to Ohio. Now, the Ohio return, like a lot of states, what they make you do here is calculate all of your income as if you were an Ohio resident, and then you get, and then we apportion the tax based on that Ohio taxable income. So lines 1 through 7 of our 1040 are going to be calculated the same as if we were a resident, and then we get a part year resident credit. Now, Emily, in this case, did file a federal extension, so Ohio doesn't have a separate extension request, but if you file the federal extension via the 4868, you get an Ohio extension as well, and you just have to mark the box on the return. So let's have a look at the federal return first. I'll go through it kind of briefly, and then we'll jump into the Ohio piece. So we can see here on our federal return the total amount of wages, so Company A and B, $147,000. And we can see the total amounts of investment income down here, so the interest, the dividend income, and the capital gains or losses. She doesn't have any adjustments to income, so no Schedule I adjustments for things like HSA contributions or student loan interest deductions. So pretty straightforward return for Emily here. So we'll have a look at the Ohio 1040 now and kind of get into some of these details. So the Ohio IT 1040, again, it can be filed for residents, part year residents, or non-residents. So we've got taxpayers' Social Security number up here at the top, first name, last name, and then the address in the non-resident state. So a current address for her, and that's going to be this Orlando address. Now the school district number, this is the Ohio school district number. Although she doesn't live in Ohio at the end of the year, you should use the school district where you last were a resident before you left. All right, so you can find those school district numbers in the form instructions. Down here for residency status and filing status, so she's checked here that we are a part year resident and then indicated that Florida is now our state of residence. Filing status, single, and has marked the federal extension filer box, right, because she did file a federal extension and gets the same for Ohio. Now, lines 1 through 7 completed the same as if we were a full-time resident. So Ohio uses your federal AGI as a starting point here. So we've got $151,106 is our AGI on line 11. So $151,106. Now, we don't have any federal to state adjustments, so no Ohio schedule of adjustments to add or reduce our income. So the amount of Ohio AGI just matches our federal. The exemption amount, so the exemption depends upon your Ohio adjusted gross income. In this case, because her income is above that top threshold there, the amount of personal exemption is $1,900, but it could be more for you if you have less income. Again, there's a table in the form instructions that'll tell you, well, depending on where your income is, what is going to be your amount of exemption. So we have the $151,106 minus the $1,900, and so our non-business income is going to be $149,206. Now, remember, we're calculating the tax as if we were a full year resident, right? And so we have to calculate the amount of income tax liability on this full amount of income, and then we claim a credit for that non-Ohio portion. So we should take a look at the tax tables and look up how much tax are we going to owe on $149,206. So if I go back to the Ohio instructions, and then I've got the tables bookmarked here. So this is the Ohio income tax bracket table, and then they have tax tables below as well. But if your non-business income is over this $115,300 mark, you use this table and you don't use these tables below. So we'll be working with this table here, and our income again is $149,206. So we got $149,206. And the tax is going to be 3254.41 plus 3.99% of the excess over 115,300. So we've got our income there. We're going to take the excess over 115,300 times 3.99% plus the 3254.41. So our total tax on that amount of income is $4,607. All right, so we go back to the return, enter 4,607. That is the tax on our non-business income. So now, once we have that completed, we can start looking at the Schedule NRC and then the amount of credit that we're going to be able to claim. So let's go to the Ohio non-resident credit calc. So this form is where we separate, okay, what are the total federal amounts and then what is the portion attributed to Ohio. So we can see here we've got the total federal amount of wages, the non-business capital gain income, so that's the capital gain income on the sale of the stocks, and then the total amount of interest and dividend income. So that's the $950 in interest, or sorry, the $950 in qualified dividend income, and then the $305 in taxable interest income. So if we go back to the NRC here, so those are our federal totals, and now we have to determine what is going to be that Ohio amount. Well, the wages, remember, we're just specifically identifying the wages that were earned while we were a resident of Ohio. And so that is the $30,000 that was from Company A that Emily was working for while she was living in Ohio. So that's the $30,000 there that's attributed to Ohio. The other $117,000 that's from Florida, that just stays over here on the federal column. None of that is going to be included in the Ohio portion. None of the capital gains are going to be attributed to Ohio because all of those sales occurred after she moved to Florida and became a Florida resident. On the non-business interest and dividend income line, so $311, that's the portion of the interest and the dividends that were paid out before she relocated. So $311 is the amount of interest income. So if we look back here at our table, we can see the Ohio residency down here, $74 in interest plus $237 in dividend income. And so that's the $311 there. So now in Part C, we calculate that non-resident portion of our Ohio AGI. So we've got the total income allocated to Ohio, line 9 plus 15, that's $30,311. And then our total Ohio AGI, remember, assuming as if we were an Ohio resident, is $151,106. So we subtract the difference there, and the non-resident portion is going to be $120,795. All right. Now, page 2 is section 2, Ohio business income. This is blank because we don't have any Ohio business income, so we've just left that off. So now that we have those values completed, we can move on to the Ohio Schedule of Credits. So the Ohio Schedule of Credits, we have our tax liability here before the credits. That's coming through. That was the calculation we had earlier, right? The $4,607. We don't have any other credits or expenses that are being claimed here, so you can see that all of these are just zero. So on page 2 here, we have the total tax, $4,607, and now we calculate the amount of tax attributed to the non-Ohio income. So we've got our non-resident credit here, dates of Ohio residency, Jan 1 through April 1st, 2022, and then our other resident state here is going to be Florida. So we have the non-resident portion of Ohio AGI, $120,795, so that just came from this worksheet down here, right? $120,795. So we've got our $120,795, and then we have our Ohio AGI coming through from the 1040 line 3, $151,106. So divide 31 by 32, and we've got 0.7994, so 79.94%. So now our credit, take line 30, 4607 times 0.7994, and we get a non-resident credit of $3,683. All right, so this is the amount of our credit that can be applied against the total amount of tax calculated on all the income. So we report the 3683 on the 1040 in line 9. So let me scroll back up here. So we've got our Ohio 1040, line 9, our non-refundable credit, $3,683. So the total tax, $924. This is our actual liability based on that Ohio portion of income. So $924 on that $30,000, $30,311 of tax or taxable income in Ohio. And so $924 is basically what we owe, and now we have to account for any kind of withholding or payments that were made. And so that's done on the Ohio income tax withheld schedule. So if we go to the ITW here, we can see the Ohio schedule of withholding. Remember, she had that first job in Ohio where it was Ohio wages, and then Ohio income taxes were withheld. So we've got the primary taxpayer here, information on the company, so company EIN, employer, Ohio ID number. Total Ohio wages was again $30,000. She had $1,489 of taxes withheld. So we're claiming the withholding credit of $1,489. That's the total payment. And so she has an overpayment of $565. So $565 is going to be her refund here. And she's elected to just have that sent to her by check. And in her case here, doesn't really make much sense to have this apply to next year's taxes, because this is likely the last Ohio return she's going to do. Unless she has any more connection to Ohio, she should just file this part-year resident return, get her refund, and then just continue on in Florida. So that covers it for this tutorial. I hope that was helpful. If you have any questions, please feel free to leave a comment below, and I look forward to seeing you on the next video. Thank you.